Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, very good morning to you. And how is the handover looking like today from the global markets? Not a bad day, I assume.
Right. Good morning to you, Vinny, and good morning to everyone. So there's good global handover coming in, a bit of recovery that we are seeing after days of sell-off. Now the US stocks rose, marking a turn from two sessions of deep sell-offs. All three indices closed higher, helped by a rebound in the banking stocks, as investors are now betting that the contagion risk has perhaps been contained following the bank closures. Now, also the consumer price index that came in yesterday came in at 0.4% on a month-on-month basis, slightly lower than the January inflation data of 0.5%. And on an annual basis, it came in at 6%, lower than the January number of 6.4%, in line with the Dow Jones estimates. On the back of that, Dow Jones ended up 336 points, snapping a 5-day losing streak. The S&P 500 added more than 1.5%, and the Nasdaq Composite climbed 2% in trade. Now, the First Republic Bank was up 27% after closing down nearly 62% on Monday. Even the European markets closed up higher on the back of the cooling inflation data that came in from the US. DAX and CAC were both up 1.8%, Stock 600 up 1.5%, and FTSE was up 1%. So good positive global handover coming in there. Vinny, where's the crude at?
Absolutely, and let's talk about the crude prices also. When you look at the Brent crude oil prices, seeing some bit of a correction that we saw coming in overnight as well. But this morning seems like again they're gaining a bit in trade as well. So keep an eye out on Brent crude oil prices. After falling, we are seeing a rise coming back for the Brent crude oil prices. Even when you look at the WTI crude oil prices, let me just pull that up as well. WTI crude oil prices currently trading around the $72 per barrel mark as well, which is up almost 1% in trade as well. And Brent crude oil prices are up 1% as well. So keep an eye out on both these crude oil derivatives as well.
Right, Vinny, and let's quickly take you through the events that you need to keep a track of today. In the US, of course, the US CPI and the retail sale numbers are going to come out today. We also have the EIA crude inventory data that's likely to come out. Of course, the UK will be presenting the spring budget today, and the China industrial production number is also likely to come out today. That's a global handover, the global events that you need to keep a track of, and we will, of course, be closely tracking as well. Vinny, what are the global headlines then?
Absolutely. Let's talk about the US CPI. Now, that inflation actually has slowed to the 6% in the month of February from 6.4% in the month of January. But the core prices continue to rise at an uncomfortably fast pace as housing rent continued their sharp rise. Inflation remains 3 times the Federal Reserve's targeted rate of 2%, but provides extra leeway in its battle to tame inflation.
And more pain for the California-based lender Silicon Valley Bank. Now, the U.S. Justice Department and the Securities Exchange Commission are reportedly investigating the sudden collapse of the bank. Regulators are investigating bank's stock sales and whether executives were in fact involved in insider trading.
Credit rating firm Moody's places First Republic and 5 other U.S. lenders under review for downgrade. This is a concern flare-up around the health of lenders following the collapse of SVB Bank. Now, Western Alliance Bancorp, Intrust Financial Corp, UMB Financial Corp, Zions Bancorp, and Comerica Inc. among the lenders put under watch. They have also downgraded Signature Bank and withdrew its credit rating following the lender's closure over the weekend.
And some more news on the layoffs in the tech giant Meta expects to cut 10,000 jobs by late April. The company says it will lift its hiring and transfer freeze after restructuring. Zukerberg shared today that the company will now focus on having a more optimal ratio of engineers. Facebook's parent company may cut jobs in the recruiting and business verticals as Meta makes more organizational changes. Zukerberg is encouraging his employees to meet in person and build trust. My colleague Raksha joins in with more details.
Well, the bloodbath across tech continues. This is not the first time. This is the second time around that Meta has announced another round of tech layoffs, which includes 10,000 jobs that will be cut. And Mark Zukerberg has also announced that 5,000 of the open jobs will again be shut for hiring. Now, of course, in his post on Facebook, he shared leaner is better. And what he's trying to do is calling 2023 the year of efficiency, and has said that they are planning to cut a lot of middle managers out from their system. Now, he is also, this is of course as a result of the fact that during the pandemic, they ended up overhiring because there was a lot of demand for Meta services. Meta is the same platform under which Mark Zuckerberg runs Facebook, Instagram, as well as WhatsApp services. Now, not just that, it led to a 30% increase in headcount in 2020 and another 23% increase in 2021. After which, when the ad sales and revenue of the company started falling, the best answer that he could find was to lay off employees, which he did last year, where 11,000 Meta employees were laid off. And this time again, now he's announced 10,000 layoffs for Meta. Okay, thank you so much for that, Raksha. But let's talk about Apple. You know, from one giant to another, Apple is dealing bonuses for some of its employees as per Bloomberg reports. Now, employees who were expecting bonuses in April will now have to wait until October. The company is also reportedly watching travel budgets and leaving some positions open as well. Do remember that the company has not laid off workers but has dramatically slowed down hiring in many divisions outside of engineering.
And shifting focus to geopolitics, a Russian fighter jet collided with a US drone, causing an unmanned US drone aircraft to crash into the Black Sea. The incident highlights the increasing risk of direct confrontation between Russia and the US over the Ukraine war.
And India has reduced its weapon imports from Russia by 20% on the back of its push of Atmanirbhar Bharat. Now, these imports have gone down from 65% to just 45% in just 4 years. But how far have we come from that? Let's go across and listen in to what my colleague had to talk about this.
India remains the world's largest arms importer between 2018 and 2022, Russia being the largest weapons supplier to India. This as per a report by the Stockholm Peace Research Institute. It's a position that India has maintained, although embarrassingly, since 1993. Saudi Arabia, Qatar, Australia and China, these are the other top arms importers of the world. So as per this report, Russia is the largest weapon supplier to India. India accounts for 45% of the total imports between the years 2018 and 2022. France has displaced the United States as the second biggest supplier with a share of 29% in India's imports. And the United States is a distant third at 11%. On the flip side, you have the United States, which continues to be the big daddy of global arms business with a share of 40% in global arms exports. Russia, France, China, Germany, these are the other big arms exporters. But their share in the global arms business pales in comparison to the United States. However, the Swedish think tank's report that we're talking about, it shows several promising trends. Firstly, India's arms imports have declined by as much as 11% between 2013 and 2017, and then again in 2018 to 2022. Further, India's overdependence on Russia seems to be decreasing. So between 2018 and 2022, India's arms imports from Russia declined from what was 64%, it came down to 45%. Attempts to diversify arms procurement have seen France emerge as the second rank for India. And this can also be attributed now to India's recent push for Atmanirbharta and attempts to bolster defense manufacturing at home. So in the recent budget, the union government earmarked a record 75% of the defense capital procurement budget for the domestic industry. India's expenditure on defense procurement from foreign sources has also declined from 46% in 2018 to 36.7% in 2022. The Modi government clearly has set this ambitious target of achieving a domestic turnover of 1,75,000 crore rupees in the defense and the aerospace sectors. Further, it has set a target of achieving exports worth 35,000 crore rupees by the year 2024-25. So clearly, a lot needs to be done, and it has to happen at a faster pace if India has to achieve these ambitious targets in the near future. Until then, it has to live with the tag of the world's largest arms importer.
And well, with that, it's time for us to quickly slip into a short break. You don't go anywhere. There's lots more news coming on the domestic front on the other side. Welcome back. You're watching Market Cafe. Before we begin with the rest of the news flow, let's quickly go across to news for the hearing impaired.
संसद का बजट सत्र जारी। दोनों सदनों में अहम विधायी कामकाज सूचीबद्ध। लोकसभा में रक्षा मंत्री राजनाथ सिंह आज अंतर सेना संगठन, कमान, नियंत्रण और अनुशासन विधेयक 2023 पेश करेंगे। वहीं उच्च सदन में आज स्वास्थ्य और परिवार कल्याण संबंधी संसदीय स्थायी समिति का प्रतिवेदन पटल पर होगा पेश। भारत की G20 अध्यक्षता के तहत अमृतसर में आज से एजुकेशन वर्किंग ग्रुप बैठक की होगी शुरुआत। 3 दिवसीय बैठक में शिक्षा में अनुसंधान और नवाचार को बढ़ावा देने पर होगा मंथन। सिक्किम की जीवंत जैविक खेती को प्रदर्शित करने के लिए गैंगटॉक में आज से तीसरा B20 सम्मेलन होगा शुरू। इस दौरान पर्यटन, आतिथ्य और फार्मा में बहुपक्षीय व्यापारिक साझेदारी के भी तलाशे जाएंगे अवसर। पाकिस्तान में हाई वोल्टेज ड्रामा जारी। तोशखाना मामले में इमरान खान की संभावित गिरफ्तारी के मद्देनजर पाकिस्तान के कई शहरों में विरोध प्रदर्शन जारी। भारत की मेजबानी में आज से नई दिल्ली में महिला विश्व मुक्केबाजी चैंपियनशिप की होगी शुरुआत। 74 देशों के 350 से ज्यादा मुक्केबाज करेंगे जोर आजमाइश। भारत के 12 मुक्केबाजों से रहेगी पदक की उम्मीद। विमेंस प्रीमियर लीग में मुंबई इंडियंस ने दर्ज की लगातार 5वीं जीत। गुजरात जायंट्स को 55 रन से हराया। प्लेऑफ में पहुंचने वाली बनी पहली टीम।
That was the news for the hearing impaired. But as we slip into a break, let's go across and look at the exciting lineup we have for you all on the market. 8:55 a.m. Sandeep Tandon, CI at Quant Mutual Funds, joining in with us, talking about the volatility in the markets. Also, we'll have Shankar Sharma at 9:20, market veteran, to talk more on the markets as well. At 9:35, we have Jitendra Gohil, Director Investment Management at Credit Suisse Wealth Management, to talk on the markets. Vikas Khemani also will be joining in with us at 9:45, who's the founder at Carnelian Capital Advisories. While in terms of the understanding the industry trends, we have Metropolis Healthcare yet to talk from that at 10:20 a.m. Amira Shah.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. Let's quickly move on now. Global jitters seem to have gripped the D Street. We spoke to a whole host of market experts to understand their view on how one must navigate this volatile market. Listen in to what they had to say.
Broadly over time, equities will do well, and secondly, that broadly over time, if you buy on fear which is not directly associated with you, you will mostly do better than other markets where their fear might be more valid up to a point. But I don't see the connection between US banking sector and our banks at the first level. Like the market is down less than 0.9%. If you look at it year to date, the market is down like 4-5%. And this is after absorbing a very big issue, which at the end has been handled well, which is from their point of view, the Adani issue.
Very unlikely that anytime soon we are going to ZIRP, which is zero interest rate policy in US. It's very unlikely that, RBI would actually come with dollops of liquidity anytime soon. And which is why, the tightness in the markets would sort of sustain very likely, even though inflation's sort of peak, as you said and alluded to, is very much behind us. It's just that the scare of it, of its return is so much that central bankers, Nikunj, would rather be circumspect, for throughout 2023 and not cut rates or, perhaps, we'll pause on QT, but we'll certainly not do QE. And all of that doesn't augur well for equity, Nikunj, which is why, I'm afraid that even today is meant, but I continue to say that stay out, be underweight, general equity, and be extremely cautious of small and mid cap.
In SVB's case, we saw Fed had to take few days to intervene. So put all these things together, better regulation, quicker responses, much diversified this deposit base. I don't think so. SVB kind of things will happen in quote unquote regulated and supervised sector of finance in India.
It has implications for policy going forward. As Andrew just mentioned, obviously, we've seen a significant rally in US bonds. Markets have pared back, tightening expectations to the point where now there's only a 1 in 2 chance of priced in for a Fed hike at the next FOMC meeting. And again, it seems like an overdone reaction, but now there's a real chance that the Fed will pause. So I think amidst all this volatility, the Fed is also trying to gauge the market reaction. We've had substantial weakness in European equities. Today, we've had, or will be seeing that in the futures. We've had we had some weakness in US markets, but not significant. Bank stocks certainly came under a lot of pressure.
Okay, and amid the carnage that we've seen coming in the markets, and Nifty Bank is languishing below the 39,500 mark. But Kunal is here with an interesting insight on that as well, and that might hint at a rebound. Let's go across and listen in.
Very interesting observation. It's something which has worked quite well for the markets in this leg of downtrend, which has started from December 2023. So what I'm showcasing on the charts today is not just this classical downtrend, but every time when the Bank Nifty or the Nifty as well have gone into a correction, it's managed to close a major gap. Now this was, for example, the first gap which was closed for the Bank Nifty when it I think started to get into a corrective phase from the month of November. From this gap closure, the Bank Nifty saw a very strong bounce and then a further sell-off for the index. Now, the second gap which was formed over here, as you can see, that the Bank Nifty closed the gap, second gap. This was on this February budget time. The Bank Nifty fell below the 40,500 mark. We managed to see a strong bounce from those levels and then a further sell-off. Now, the reason why this is very important is because right now the Bank Nifty is closed the third very important gap over here, which was in the month of September, October. This is around the 39,000 mark, which means if we go by the previous two attempts, there have been very strong bout of counter rallies in this kind of a leg of downtrend. And if we expect similar kind of a rally from here on, we can expect the Bank Nifty to at least touch 40,000 first before it gets into the next leg of correction. So this is a very important phenomena. It's happened twice in the Bank Nifty in this last 3 months of downtrend. And on both occasions, we've seen a very strong bounce on the index, a counter rally. So we can expect that the third time around as well, we can expect a similar reaction from the Bank Nifty.
Well, a good word coming in for the Bank Nifty, perhaps a rebound. But how is India placed given all the global gloom stemming from the SVB rout? Where is the Dalal Street headed, and where should you park your funds given the ongoing market volatility? Should the metals be your go-to sector this fiscal? Let's hear it out from Rakesh Arora, who's the founder at GoIndiaStocks.com.
Q4 would be an improvement over Q3. But is there a bull run happening? That's unlikely because despite China opening up, demand is not playing out as everybody expected. China during COVID was trying to support the economy and they had pump primed infrastructure spend. So after the reopening, they haven't really been able to increase it any further. So there's hardly any been any demand pull coming from infrastructure beyond what was already there in 2022. At the same time, housing issue remains something which is unresolved at the moment, despite government measures to support it. The real demand for housing in China is around, say, 0.7 billion units, whereas they are still constructing around 1.2, 1.3 billion units. So there is an excess supply out there. So overall, I would say that metals are in neutral zone. They will be like a market performer. Valuations are not very cheap, but they are reasonable, and so they will swing along with the market. I don't expect major moves on the either side. Banks are looking very attractively valued. And some of the banks are closer to where they were during COVID time in terms of valuations. So I don't really see any major constraint on that side, at least. Demand outlook still remains reasonable. It's just that the deposit growth was not happening, and deposit rates are now started to increase.
And let's move on. Tata Steel's MD TV Narendran shares the need to push for more manufacturing-intensive industries. He spoke to ET Now on the sidelines of the ongoing event, and he adds that the outlook for metals remains positive, with China opening up to the world again. Let's go across and listen in.
Anything which encourages manufacturing in India, I think is good and positive, and I think the response to the PLI schemes are indicative of the fact that there are a lot of companies in India and outside India willing to invest based on the incentives that are being provided. So I think, but obviously the government has to decide which sectors need more support and which sectors can do with less support.
Right, but you mentioned about incentives and the fact that policy support needs to happen, but that's exactly what the criticism is as far as these PLI schemes and subsidy schemes are concerned, that if you give subsidy schemes to one sector, then that tends to get developed more than the others, and then once it wanes off, then sort of the push.
So if I look at it from the steel industry point of view, the PLI scheme for steel is hardly 6,000 crores, which is less than the capital expenditure of any big steel company in India per year, right? So for the steel industry, it's very sharply focused on products which are not produced much in India. So to that extent, the government has kept aside more for industry sectors like electronics manufacturing, which didn't exist in India in a big way, which is, I think, the right thing to do. While the steel industry will keep saying, give us more, but maybe the focus should be on industries which, to me, are less capital intensive and more job intensive, and I think we need to encourage investments in industries which create more jobs.
I know it's a little difficult to sort of, comment on this, but any guidance that you can give for the next few months?
On what? On Tata Steel or steel industry or?
The steel industry, of course, Tata Steel.
Tata Steel guidance, you'll have to wait till our results. But steel industry, fundamentally, at a very fundamental level, we continue to be very positive because budget after budget for the last 3 years has kept aside more money for infrastructure. That's positive for steel industry. Many user segments like commercial vehicles, etc., coming back to where they were 4 years back. Construction hasn't picked up as much as we had thought it should, but we are hopeful it will happen over the next few months. And globally, I think with China opening up, the metal sector has some positive tailwinds.
All right, it's time for a quick breather now. Don't go anywhere. There's lots more stock-specific news on the other side.
Welcome back, and you're watching Market Cafe on ET. Now, let's quickly look at what the Asian markets are doing. How have they opened this morning? Nikkei, seeing some green coming in there. Overall, as of now, Asian markets have opened up in the green, given the positive cues that we've seen coming in from the US markets as well. They ended positive, so those positive cues are coming in for the Asian markets as well. Nikkei up 0.2% in trade. Whether you look at the Australian index, that is ASX 200, that is up around 0.4% in trade. Shanghai too seeing strong gains, around 0.5% uptick in trade, while Hang Seng is up more than 2% as well. So positive cues, positive opening coming in for the Asian markets. And look at the SGX Nifty also indicating a positive start for the Indian markets as well. SGX Nifty as of now is up 0.5% in trade. 17,208 is what the SGX Nifty is at.
And well, Reliance Jio has launched 4 new postpaid family plans, Jio Plus, that will be available free of cost for the first month in a move to boost its presence in the postpaid segment, which has, of course, the customers that are less price sensitive. My colleague Somit joins in with more details. Take it away, Somit.
Well, if you see, Jio has launched or introduced new postpaid plans. Now, what is different compared to the existing plans? Firstly, the 399 plan, that is an existing plan. Now, they have changed this to a family plan, which means that a user can add 3 new SIMs to that plan at 99 rupees each. However, do remember there's no Netflix and Amazon Prime that Jio is providing in this plan. Then there comes a 699 plan. Now, this is completely a new plan and it's a family plan, which means that a user can add 3 additional SIMs at 99 rupees each, and there is Netflix and Amazon Prime subscription given as complimentary by Jio. Then there is a 299 plan. Now again, this is a new plan added, but this is not a family plan, which means that no additional SIMs can be added, and also there is no Netflix or Amazon Prime service given by Jio on this plan. And then there is a 599 plan, which is an unlimited data plan, and this is an existing plan in which Jio was providing earlier 100 GB of data, but the change is now that there will be unlimited data provided in this, but there won't be any Amazon or Netflix service on this plan. Now, when you compare it with peers, the 299 plan that Jio has introduced is the lowest postpaid plan on the street available, and this might have been done by Jio to attract more postpaid users on its network. However, the 399 plan that Jio has introduced, now comparing it with Airtel and Vodafone Idea, in which also you can add additional SIMs, if you see, the data provided by Jio on this is largely at par or on the higher side, but the plan is nearly cheaper compared to Vodafone and Airtel. In fact, Airtel and Vodafone plans are 40% more expensive when compared to Reliance Jio. Then there is the other plan of 699. When you compare it with Airtel and Vodafone Idea, the base charges might look higher, but if one is adding additional SIMs, that is if 3 SIMs are added, then the total cost is largely at par with what Jio is giving when it comes to Vodafone Idea and Airtel. But the content offering is different in all this. Airtel is offering Amazon Prime and Disney Hotstar, while Jio is offering Amazon Prime and Netflix. And in case of Vodafone Idea, they are offering Amazon Prime, Disney Hotstar and Z5. However, a user can switch to Airtel's 1199 plan also, because that gives you 3 additional SIMs, but also it gives you content offerings at Amazon Prime, Disney Hotstar and Netflix. Now, though this is expensive, but the content offering given by Airtel is much higher as compared to what Jio is giving. Similar plan is given by Vodafone Idea also at 1149. Also, the SIM one can get 4 SIMs instead of 3 SIMs that is given by Airtel and Reliance Jio in this case. Now, if you see the 599 plan, that they have made some changes. Now, there is no direct comparable for this plan, but Airtel has a plan at 499 rupees. It gives you only 75 GB of data, and whereas Jio is giving unlimited data. But do remember, Airtel is also giving you content service like Amazon Prime and Disney Hotstar at 499. Now, why Jio is focusing more on postpaid? Because the penetration of Jio in postpaid is very low. In fact, for Airtel and Vodafone Idea, if you see, nearly 5 to 6% of the total user base sits on postpaid, while Jio has not been disclosing this data because the penetration level is very low. Now, why postpaid is important? Because the customers are more stickier, least price sensitive, high ARPU generating. In fact, if you see, Jio's prepaid ARPU stats at nearly 143 rupees as against 299 rupees, which is nearly double of what the prepaid ARPU is, and hence this is the main reason why Jio has been focusing more on postpaid. Now, do remember, this is Jio's third attempt to attract postpaid users. Back in 2018, they had introduced the 199 plan as against 299 and 399 plans of Airtel and Vodafone Idea back then, but it failed to attract user base on postpaid. In 2020, they added the 399 plan, which had generous content offering, but still they were not able to attract more postpaid users on their network, and this is the third attempt. So it is important to watch out for how the postpaid user base of Jio moves going ahead, because this is the third attempt to get postpaid users on their network.
Okay, thank you so much for that, Somit. But let's move on and bring on board Lisa as well as Amakshi in the studios. Very good morning to both of you all. And Lisa, first we'll start with you. What are the other stocks to watch out for in trade today?
Well, good morning to all. It looks like infra stocks will be in focus today as a bunch of companies have been awarded orders. So starting with PNC Infra, they have received highway construction order of around 1,260 crore and they have been declared the L1 bidder in NHAI highway project, and the project is expected to be constructed in 24 months and operated for the next 15 years. RailTel has also received IT infra order of around 288 crore, and it relates to greenfield data centers in New Delhi as well as Bangalore. And NBCC, they have received medical contracts worth rupees 500 crore from the Puducherry government to build a government medical hospital at Karaikal. Other than that, Maruti Suzuki's parent Suzuki Motors, they have acquired around 303.5 lakh shares, and that is between March 10 to March 13th, and the stake has been increased to 56.48%. Other than that, Reliance, talking about Reliance, the CCI has approved Reliance Retail's Metro cash and carry purchase. This is related to 344 million buyout of Metro's local business. And lastly, Mindspace REIT has granted option to Chalet Hotels to acquire 1.8 acres in Navi Mumbai. So these are the stocks that will be in investors' radar for today.
Well, thank you, Lisa. We will be keeping an eye out on all these stocks. Now, we also have Vamakshi in the studio who has all the brokerage notes that came in this morning. Vamakshi, take us through what the brokerages are saying.
Well, absolutely. A very good morning to all of you all. Let's first start off with Sona BLW. We have a note that has come in from Jefferies, and what they're highlighting is that the company is building blocks for the new auto age. They like Sona's strategy of expanding its component portfolio. They also have a large order book which provides good visibility in terms of growth. They're expecting to see 31% revenue CAGR in the next 3 years and also expecting 40% EPS CAGR over the same period. Valuations are appearing rich, but they're expected to sustain at the current levels. So given all these factors, Jefferies has initiated coverage on this stock with a buy rating, target price of 575 per share. The next stock on our radar, or rather the next sector on our radar, is apparel retail. We have a note that has come in from Morgan Stanley. Now they've initiated coverage on this on apparel retail, and they are highlighting that there is concern among investors regarding the near-term slowdown. Competition is rising, and in fact they believe that Vedanta Fashion is best placed to play the Indian ethnic wear story. Page Industries, on the other hand, they believe is a potentially commoditized category but built to last business mode. So given all those factors, they're overweight on Vedanta Fashion as well as Page Industries. For Page Industries, they've given a target price of 44,500, while for Vedanta Fashion it's at 1,354. They've also initiated coverage on Trend with an equal weight rating, and they have an underweight rating on ABFRL. The last stock on our radar is Maruti. We have a note that has come in from Citi. They're highlighting that they've maintained Maruti as the top pick in the auto space. They believe the company is no longer just a small car maker, and in fact it is prepping for the big race ahead. Market share for the company has bottomed out. New utility vehicle model should also help the company in boosting market share. The semiconductor issues that were there that are expected to recede over the slightly longer term, and given all these factors, they maintain a buy rating, target price of 12,500 per share for Maruti Suzuki.
Okay, thank you so much for that, Vamakshi. But, Lisa, one thing that has happened is in that Vedanta parent company's bond yields, the Vedanta Resources bond yields have gone up by 40% in just the last few trading sessions. So how does this actually impact, Vedanta? What are the key concerns that we have around this then?
Yes, Vedanta has come out with a press release. They said that they have repaid around $150 million of loan, and they have released the entire pledged holdings. Now remember, Vedanta had pledged around 70% of their stake, and the loan repayment is with regard to borrowings taken from Deutsche Bank as well as Barclays Bank, and this lending agreement was signed last June with Twin Star Holding as well as Vedanta Resources and Welter Trading. So just a month ago, a report suggested that Vedanta Resources would be it would take some time to meet their obligations, which is due in September 2023, and the company tried to secure $1.5 billion, which hit a roadblock as the government was not approving the sale of its international assets to Hindustan Zinc. And also last Friday, rating agency Moody had downgraded the rating of Vedanta, and this was over the concerns of increasing refinancing risk in their debt maturities. So the fundraising as well as the debt servicing capability of the parent was a concern, and this move by Vedanta of repaying its loan and also releasing its pledge, that kind of puts rest to these concerns.
Well, thank you so much for that, Lisa. Now, Vamakshi, tell us, you have all the key details of the management takeaways for Greaves Cotton. They're expecting a 50 to 70% volume increase by FY24. What are the other details? Take us through that.
Well, absolutely. We did see that Nuvama visited Greep Cotton's e-two-wheeler plant, which is located in Tamil Nadu and Ranipet. And here are some key highlights from the management meet. Now, what the company has highlighted is that the Ranipet production capacity is of nearly 0.5 million units. Now, this is large and in fact is geared towards serving the future demand. In fact, they've also highlighted that the two-wheeler capacity could be expanded to 1 million units using the existing infrastructure. Now, e-two-wheeler volume industry-wide is expected to touch nearly 7 lakh units rather in FY23, and they're likely to grow by nearly 50 to 70% in the next financial year. New products as well as the network expansion and increased marketing efforts are expected to aid two-wheeler growth going in the next financial year. Apart from that, they also believe that the competition is likely to increase as incumbents launch models across e-two-wheelers. Furthermore, there is an increase in the share of high-speed scooters in the EV category, and this could in turn have an adverse impact on Greaves Cotton, and that could come in because Greaves Cotton has a better presence in city speed scooters. However, to tackle this, the company is introducing new products that improving its presence in the high-speed category as well. Now, what Nuvama believes is that notwithstanding that the company does have an early mover advantage, there is some concern surrounding the market share losses over the medium term for the company. Nevertheless, strong dispatches in Q4 of FY23, product launches, and in fact an attractive valuation could help support the stock's performance in the near term. So given these factors, Nuvama has actually gone ahead and maintained its buy rating on the counter, given a target price of 187 per share.
Okay, thank you so much for that, Vamakshi. That was the key takeaways for Greaves Cotton. But PVR held its first call post the merger and with Inox Leisure. So we have a lot of important takeaways coming in from that con call as well. Let's talk about the key highlights. Firstly, 12 to 24 months, they are expected to realize the merger synergies now, and overall the annual EBITDA synergy of around 200 to 250 crores will be coming in as well. Now, in terms of obviously what is leading the growth, leading in the QSR with an annual revenue of 1,500 crores. Other than that, what the company is doing is they're looking to add around 180 to 200 screens over the next year to 2 years time period is what they've highlighted, expanding the reach to serve the customers. And other than that, in terms of good growth opportunities, what they see coming in for PVR pictures which are identified and scaling up of the business across languages. Now, do not forget, PVR currently operates around 1,674 screens, which is across 358 properties and in 114 cities with a seating of around 0.35 million. So overall, when you look at brokerages, they continue, Nuvama has said that they continue to be positive on the combined entity, that's PVR and Inox, because it commands a market share of 43% in multiplex screens and 50% plus in multiplex box offices as well. Nuvama is maintaining a buy rating on this one, given a target price of 2,125 rupees per share. Overall, obviously, the company shall focus on driving the synergies from the revenue, wherein food and beverages would be a key contributor, as well as post the completion of the merger that has resulted in a wider footprint now for PVR Inox. They will access much more areas coming in as well. So that is a positive that they're keeping an eye out on. Accelerated screen rollouts across key markets will be a factor that we are keeping an eye out on as well. So positive takeaways that we're getting in coming in from the PVR con call. Other than that, you had BOFA also that came out with a note on PVR. They too are maintaining a buy rating, given a target price of 2,405 rupees per share. They see that the synergies of PVR Inox seen post 6 to 8 months and see expansion specifically in the southern region. Merger is completed, focus on synergies and expansion will be a key positive for PVR and Inox going forward. So yes, BOFA too is positive on PVR Inox. Positive notes coming in there. Keep an eye out on this stock as well today.
All right, Vinny, we will be keeping an eye out on PVR. Moving on from PVR to Federal Bank. Federal Bank is weighing to sell its stake in NBFC Fedfina. Now, Fedfina is valued at 5,000 crore rupees and has a possibility of launching its IPO in 2024. Now, Fedfina is a retail-focused NBFC and is the first among 5 private banks promoted NBFCs in India. Now, Fedfina has filed a draft Red Harrington prospectus in February last year, which got pushed to May but never really saw the light of the day. The Federal Bank's holdings in Fedfina is not clearly determined, but it seems to be negligible.
Right, and let's move on, just talk about the current volatility, that is then there suddenly we're seeing, given that SVB Bank's volatility. We spoke to DP Singh, actually managing editor at ET Now, Nikunj Dalmia caught up with DP Singh, who's a deputy MD at SBI Mutual Fund, on this ongoing global turmoil, the volatility there, and what does he make of it as well. Let's go across and listen in.
If we look at the earlier crisis which happened in 2008, that was a credit event. That was definitely a credit event. This is a asset liability mismatch issue. And asset liability, we are really surprised at how this is being done in such a manner. There's a huge asset liability mismatch. When we look at India and Indian banks, I think our regulator is doing a great job, and there's no such big asset liability mismatch in Indian banks. That's number one. Number two, as far as credit is concerned, our position has improved over the period of last, I will say 9 to 12 months. It has improved much better. And the Indian businesses are doing so well. Most of the delinquencies which are there, people are ready to or already paid back, or they are ready to pay back. They are working towards that. So all those things are favoring our economy. I don't think there will be much impact. But yes, when an economy like US is in trouble, it has an impact everywhere. It's impacting our equity market also. But of course, equity markets was always being said that it's overvalued, blah, blah, blah. And there was a trigger required for the corrections to happen. So I think enough has happened. I think whatever needed to be happen, and we have got the fair valuations now. So I think the future is quite bright from here on.
Well, on that note of a bright future, it's time for us to wind up this show. But there's lots more coming up on the market. Stay tuned. Thank you so much for tuning in for this one.